Hey everyone, we got some more big news for Tesla stock investors coming out of China. Tesla stating that it's reducing production of its vehicles due to lack of consumer demand. So I'm going to talk a little bit about that news and why it's not really bad news. Now, I know it sent the stock price down 2% as a result of this report, but I'm going to talk a little bit more broadly, more longer term, more strategically about the EV industry and why this move, coupled with some of the other moves that have taken place in recent weeks and recent months, are starting to paint a better picture for the EV industry. So let's jump right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so here was the news. Tesla saying that it reduced its car production at its plant in China on Friday as the US EV maker grapples with slow demand and strong competition in the market. Now, I probably sound like a broken record, but I've been talking about Tesla's demand slowing for several months, several quarters. I've been talking about supply is growing much more quickly than demand. The EV market is not in good shape. And even as recently as February, when I made a video about Tesla's demand slowing in China, I had dozens of comments on that video suggesting that the only reason demand was down in February because Lunar New Year was in that month and that week, and if you take that out, then demand is strong. And I argued that's not the case. Demand has been slowing for a while now for Tesla. And not just Tesla, I should say, for all EV companies. But we've known that. Like, I've known that, and I think smart investors, savvy investors have known that for a while, that the EV demand is slowing considerably. That's not anything new. So this news about slower production because of slower demand, the slower demand part is what might be sending the stock price down, but I don't think it should. I don't think it should, and I'm going to talk more about that in this video. I think what investors should focus more on is the decreasing supply part. The decreasing supply part is more important in this news release than the decrease in demand, because the decrease in demand, you should have known that by now, right? If you didn't know that by now, then you're probably neglecting all the information that's been coming out surrounding the EV industry, and you've just placed your hopes on the fact that EVs are the future and demand is just going to grow and people are just going to be forced to buy these EVs and they're going to have no choice, and that's it, and that's the end of it. That's not the case. EVs, for now, are more expensive and less convenient. That's the simple fact of the matter. They're more expensive and they're less convenient. And so for that reason, they're only going to have a market for the certain few percentage of people that make sense to own an EV. Those people that maybe have a home that they can install home charging and charge the vehicle at night at home when the electric costs are lower. And so for those people, it might make sense. And that's why you've seen less than 1 out of 10 people are choosing an EV instead of a legacy vehicle. So let me focus more on the decrease in supply. So Tesla hasn't been alone, right? So Tesla reduces car production at its China plant. Earlier, Ford said that it's cutting the production of its fully electric F-150 Lightning pickup truck in half. Rivian earlier in March said that it's pausing construction at its factory in Georgia that received some of the most generous taxpayer-funded incentives. So despite all these generous tax-funded incentives for Rivian, it's pausing construction on a new manufacturing facility. GM said instead of having 400,000 more vehicles ready to go by the summer, they'll instead have 300,000 zero emissions vehicles, and that number could be as low as 200,000 if GM hits the lower end of its estimates. So all these EV companies are lowering production for 2024 and beyond, and that's good news. That's good news, not bad news, right? So because you need to already understand that demand for EVs is not strong, right? You need to go into it with that assumption baked in. Now, when you go into it with that assumption baked in, then the decreases in supply turn into good news, because now you see it as just a prudent decision by these car companies decreasing supply to match demand which is not very strong. Now, I'm just talking about EVs, the imbalance between supply and demand. The car market overall has been in misbalance in between supply and demand for a while. It's the nature of the business, because capacity comes online in large chunks, right? When, let's say, Rivian, if they decide to continue production on that facility in Georgia, that's going to bring online hundreds of thousands of new units, right? It's not just going to increase capacity by 1,000 or 2,000, right? They don't increase capacity incrementally in the car industry. When they put on a new facility, it adds hundreds of thousands, if not millions, of units of extra capacity into the market, and that causes a misbalance, an imbalance between supply and demand. So, worldwide automobile production in 2022, 85 million vehicles were produced worldwide. 85 million. And that's not even at the peak, right? This is just recovering from the pandemic, and this is according to Statista. It increased to 85 million units. Now, at the peak in 2017, 2018, there was enough capacity to produce 97 million units, and that's how much they produced, right? There was actually capacity for more than that, but that's how much was produced, 97 million units. And imagine, I want you to think about how many unit capacity has been added since 2017, 2018, because of the billions of dollars in funding that went to EV companies like Rivian, like Tesla, like NIO, like others, right, that are increasing manufacturing capacity, right? Rivian has just brought on board hundreds of thousands of new units of production. That wasn't there before in 2017, 2018. Lucid has brought on board all this production. Rivian is ready to increase production as soon as it gets a hint of an increase in demand. So you've got enough capacity to produce 97,000 million units. But if you look at the number of cars sold worldwide from 2010 to 2023, in 2024, the estimate is that 77 million vehicles will be purchased. In 2023, it was 75 million. And before the outbreak, 74.9 million units were produced. Between 2010 and 2019, 71 million units were purchased annually. So you've got annual car purchases of around 71, let's be generous. Let's say it's 80 million units purchased annually. And you've got enough capacity to produce above 100 million units. So your purchases are 80 million units and your supply is 100 million units. So most of you are intelligent. Otherwise, you wouldn't have money to invest and you wouldn't be watching a video about investing in Tesla stock. And so you could understand what happens when you've got too much supply in a market and not enough demand. And that imbalance is not good news for the market. So what you want to see as an investor is you want to see decreasing supply, or at the very least, a pause in the increase of supply. You don't want to see any more supply, because that's the trouble in the market to begin with. Too much supply to not enough demand. If there was less supply, then the story about demand wouldn't be that bad. You would not be hearing about all of this bad news surrounding demand. So that's why I'm suggesting that this news that Tesla's pausing production is not bad news, following all of the other news that their rivals are also decreasing supply. Now, I talk about a lot of forms of competition. You can have competition on pricing, you can have competition on supply, you can have competition on advertising, you can have competition in research and development. And by increasing supply, you're taking a more competitive stance. By decreasing supply, you're taking a less competitive stance. You're telling the industry that you're not going after as much market share. you're trying to be more prudent. You're not being more competitive. And this follows earlier in the week, Tesla saying that it's going to raise prices on its Model Ys. So now this is two steps in a direction of Tesla suggesting to the industry that it's taking a less competitive stance, which is good news industry-wide. Still, all that being said, I still think Tesla stock is too expensive. It's trading at a forward price to earnings of 39.78, which look how much more expensive it is than Ford, GM, and Stellantis, which are trading at forward price to earnings in the single digits, 6.95 and 4.7. Now, you can argue that in the future, sometime in the future, Tesla's going to have driverless cars and robotics and all of these things that you may be hoping for. And you might be right. But why invest in Tesla now and pay this much of a premium when that future is uncertain? You're risking your hard-earned dollars on the promises of a CEO that's been over-promising and under-delivering for several years. So that's why I've not placed Tesla stock as a buy. I've placed Tesla stock as a hold, simply because it's just too expensive in relation to the competition. So I'm keeping Tesla stock rated as a hold. But I think the recent developments from Tesla have been good news. The price increase and now the supply decrease, I think it's going in the right direction. I hope to see more of this coming out of EV participants worldwide. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.